Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me today. I really appreciate it. Today we got a lot on the table. Looks like the futures. We're actually going to take a look at the chart in a second. The futures are actually taking a hit. They've just lost half of their gains overnight. So we're going to get into that in a second. We're going to map out the price action. Got a big list today. We're actually going to cover in today's video Apple stock and whether it's a new buying opportunity as the stock hits new all-time highs. Also, as the stock becomes the first $3 trillion company, which is just absolutely amazing. Then we're going to do a little bit of a dive into Bitcoin, which we touched on yesterday. And we're going to talk about specifically Bitcoin mining stocks and one Bitcoin mining stock that had a really good not earnings report, a really good report about their results. And we're going to work on whether or not it's a good stock to buy now. Then we're going to jump into sector rotation. There are two sectors that we're watching right now, and I'm going to do a deep dive into the individual stocks within those two hottest sectors and determine which of those stocks might be opportunities for us to be buying right now. So stick around. We'll be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. As with everything that we discuss here, everything is for educational purposes. It's up to you to make that final decision. It's been my mission to help you make better decisions. So we're going to jump right into, we're going to go right into the futures and take a quick look at that. You can see here clearly that the S&P 500, which was up around 20 points just a couple of minutes ago, starting to sell off. And you actually can see that we're starting to make lower lows and lower highs on the 5-minute chart. What I do want to point out is if you happen to have been day trading yesterday and you were able to withstand this move here yesterday, it was just volatile and kind of out of nowhere. We actually put on a new swing trade in Starbucks yesterday, which we kind of mentioned during the day last week as well as yesterday. And we got stopped out on the same day that we put the trade on, which doesn't really happen that often. I just want to walk through the idea, and then we're going to get into all the other stuff, which includes Apple. We had it as our list yesterday, and I want to zoom this out because I think probably one of the most valuable things that I can help teach everybody here, obviously on social media and a lot more detail in our boot camp, is there's a very, very big difference between reading charts and placing trades, managing those trades, and what are the expectations for stocks that you buy. So we've been talking about Starbucks for about a week now, and I'm actually going to put this up on the screen. SBUX. And we've been walking through this level that Starbucks continued to hit. Got hit, but it wasn't selling off. We were still kind of hovering around that 117 level. And that since it was on our list yesterday and the market itself on the shorter time frames yesterday opened up higher and pushed higher within that first 15-minute window, we actually had a buy stop while Starbucks was a little bit lower, that if the market rallied, if Starbucks took out 117, and we actually had the buy stop well above that, it was at 117.50, I believe, then in both of those situations, we would look to buy the stock and we should get follow through. We actually got both of those scenarios yesterday. Starbucks opened lower, the market opened higher, Starbucks punched high, the market punched higher, Starbucks punched higher. We're like, great, everything's looking cool at that moment. And then about 15 minutes into the market, the bed just absolutely completely got lost. So I just want to show you that. And this is really more of a conversation about being a real trader versus being a chart reader. Okay. So here's the trade that we're talking about in the SPY yesterday. You can actually see that here was the previous close on New Year's Eve, exploded higher and then took off. And then quite honestly, it actually traded into one of our optimal entries about 15 minutes into the market opening. So that was step number one. So remember, we're going back and forth about how to set up the trades. If this happens, then this. If this happens, then this. We got all of that yesterday. So I just want to go now over into Starbucks and walk through the Starbucks idea. So you can see the 117 level. It actually opened lower compared to Friday, but then rallied hard with the market. So generally speaking, when I have a stock that's lower and I'm looking at a significant level that I wanted to break through, I never put it right at that level. It's always at a level that if it gets through that level, that's real trading. So in other words, if $17 the level, I don't put it at 17, certainly. I don't put it even at 17.05, 17.10, especially if it's a longer term trade. Yesterday, the entry was 17.50. We're giving it a chance to get through, giving the market a chance to get through. And quite actually, it did. But we put the stop loss well below here a few days ago, which was 115 and change. We actually had the stop loss all the way down here at 115, which was significantly lower than, that's close enough, significantly lower than the level over here. So you see both on the upside as well as on the downside, I gave the stock plenty of room to go. And you can see what ended up happening. You can see what ended up happening in the market at that same time, this violent move to the downside. You can see what ended up happening to the VIX at that point. The VIX in the morning just exploded. And if you don't know what the VIX normally does, it's the fear index. I'm sure a lot of people on this call know exactly what it does. But when you're buying stocks, you want the VIX to be trending down. Sometimes the absolute number is not as important as the trend. So buying stocks, what we want. So if we're looking to buy stocks, then what do we want to see in the VIX? We want to see the VIX trending down. And it was for the first few minutes of the day. And then just out of nowhere, it exploded to the upside, which you can actually see over here. So we put the trade on. Here's what the SPY did early in the day. Open higher, pushed. Here's what Starbucks did. Open lower, pushed higher at the same time the market did. And then here's what happened after the fact. So we actually had a couple of questions, especially from new members who are on the swing trade tracker side of things, and obviously bootcamp members. Why did that stock not follow through? Why did that stock not make us money? Why did you put the trade on and then it went backwards? Those kinds of questions I absolutely welcome. Okay, I want to tell you this. First, I'm talking about a trade that lost money. I want to be clear about that. Not everything that we do, it's not like every money flies over your fingertips. If that was the case, I'd probably be in a mountain somewhere. I wouldn't be doing broadcasts every day. But the reality is, every single trade that you take, our job is to build that argument. Our job is to come up with reasons of why we're choosing to accept risk on that trade. And the predominant thought process behind trading versus chart reading. Trading, we are stacking the reasons why we believe it's going to follow through. And in this case here, the market sold off on Thursday and Friday afternoon. Starbucks really didn't. Starbucks continued to hover near that level. The market opened higher. Starbucks opened higher. It punched through that level, had plenty of room to go. 126 in Starbucks. I'll just go back out to the daily chart so you can see what the target was, which was all the way up here. We're looking for it to retest new all-time highs. And the bottom line is it didn't follow through. No different than any other trade that we might be taking during the day, but I'll take that trade every day of the week because I had an argument and good reasons for why I wanted to see the stock follow through, why I thought it would follow through. So we had a bunch of questions, both as the market was unfolding and after the fact. And last night we had one of our weekly coaching calls, which, by the way, that alone, our coaching calls alone are worth becoming a member of the boot camp. So last night we dove a little bit more deeper into the trade scenario as well as during the day in our Discord community. And I want to express this strongly, especially because it's at the beginning of the year while you're probably watching this. We're going to get into a bunch of other ideas in just a minute about which stocks to buy and whatnot. Whether or not Apple's a good buy at all-time highs right now. Our job is not to be right. And too many smart traders, maybe you, believe that everything that we do in trading is see the signal and therefore the signal must follow through. And if the price action does not follow through, that means that the signal is bad. That means the strategy doesn't work. I just want to be clear about this, and I want to help you reduce your stress level from all the way up here to all the way off here so it's off the screen. The sooner you acknowledge that a trading edge means most of the time it will follow through, and when it does, you need to learn how to manage winning trades. But those times of the edge, where if most of the time it should follow through, that explicitly means sometimes it will also not follow through. And that's what we saw in a trade at Starbucks yesterday. So I want to get across to you that if you go into your trades expecting that it should follow through, but being prepared trade-wise and mentally-wise for the fact that it might not, but it still could be a great trading idea, you will dramatically reduce the stress that you have in your trading because you're no longer trading to be right. You're no longer trading to be perfect. And probably more importantly, is you're no longer judging the success of your edge by an individual trade. For some reason, I don't know what it is, but it's kind of funny that we get probably 5 times the amount of people surprised that every single breakout doesn't work, when you could probably look at half of the other trades that you take also don't work. I'm specifically talking about on the equity side of things and watching stuff follow through. So I can't express this strongly enough. If you have the aspiration to see your account go like this, right? And I'm very careful about this when I say this. When see your account grow month after month, I am so careful not to say you buy a stock and every single trade you make, your account goes higher and higher. That's malarkey. That's garbage. Anybody who wants to give you the impression that every single trade they make just flies off their fingertips, as soon as you hit enter, the thing just takes off, and every day is, zippity doo dah, birds singing on your shoulder every day. That's not real trading. And quite honestly, that doesn't need to happen in order for you to be a profitable trader. What needs to happen for you to be a profitable trader is, number one, have an edge that you've worked on, developed, and traded with real money for, number one, to prove that it works. And when I say works, I mean follows through more often than not. Number two is you need to be able to acknowledge that you can follow that strategy over time, follow that edge over time. And number three, what that means is you are cutting your losses, keeping them what they're supposed to be. And then the next skill you need to learn, which is understanding how to make more on your winning trades. That's it. If anybody tells you trading is more complicated than that, they're full of beans. That's all there is to trading. Develop a strategy, trade that strategy with less share size so you can actually prove that it works and prove that you can follow it. Minimize your downside, and then learn to manage the winners. So those parts of the trading there, it can be, we can make it into some like monstrously complicated thing. But let's talk about the reason why a lot of people are not profitable. Okay. Number one, and this is implying that I just said it should be simpler than you're probably making it right now. It's the lack of acknowledgement that trading is a skill. Let's just put that out there. You could sit next to the greatest traders in the planet. You could pull up a chair right next to me, and I'm a pretty good trader. I'm not going to be shy about that. You could pull up a chair right next to me, have your keyboard and everything right next to me. You still have to hit the keys at the exact same time. You have to learn how to make those decisions. Trading is a skill. And what we talked about recently is that means you need to have screen time. Screen time means you need to be in front of a screen. Doesn't matter if it's day trading or swing trade, and you have to place a trade and get feedback. How did I manage it? How did it follow through? Did I take my losses? Did I hold my winners? Did I start to pray? Or did I do everything I was supposed to do? Okay, that trade didn't work. Now let me see if I can go make the money on the next trade. Next trade follows through. And then you need to learn the skill of how to manage winning trades. You need screen time, very similar to where you need drive time when you learn how to drive. You need to drive in the rain. You need to drive in the snow. You need to drive in stop and go traffic. You need to drive in wide open roads. And you need to drive when you have distractions. Rubbernecking, people in the car with you. Trading's the same way. You need to experience different market conditions and different trades, how they unfold, so you can develop the skill of trading. If you're trading for a long time and you haven't achieved the objective of profitability, one of those pieces that we just talked about, developing an edge, trading the edge to learn if it works or not and whether you can follow it, then steps 3 and 4 are ultimately the actual trading skills, which is managing the downside and learning how to manage the upside. It's those last two that a lot of people just don't give enough credit to, that after you buy a stock, then you actually have to take action that is going to end up resulting in profitability over time. So you can buy the greatest trading strategy in the world, which I happen to believe mine is, stacking the order flow and New York method is, and we got a lot of people that prove that. But you could buy the greatest strategy in the world. You still need to apply it. You still need to get comfortable with it. You still need to go from knowledge to understanding, which there's a big difference, very big difference. You could watch 12 hours of video in 12 hours. You still need to understand and go into the market and get your teeth kicked in on a couple of trades. Have a couple of trades where you try to get 1,000 shares and you get a partial fill. And what do? You try and get out of 1,000 shares. You get a partial fill. What do? You get into a trade. It flies in your favor immediately. What do? You get a trade, flies against you immediately. What do? Those are the skills that make you a trader. Being great at chart reading does not make you a trader. Having an account does not make you a trader. Getting to that other side of trade management, it's not chart management, it's trade management. And that's why we, in our community, moment after moment, trade after trade, most of our discussions when we're in the market live together are about trade management, not the picture perfect textbook setup, not the 9 moving average versus the 10 moving average, simple moving average versus exponential moving average. All of that is a part of the strategy. You should have all of that already done before you get to trade management. So if I could give you anything to start this year, even though it's the second trading day of the year, watch this part of the video again, because if you're not achieving the results you want, especially if you're trading more than 3 months, 6 months, and especially if you passed a year and you're not seeing your account do this, it means you're focusing on the wrong part of your trading process. You have to start focusing on the management of trades, assuming you have an edge. Okay, now we're going to head on over. And I started this whole thing out because the trade that we took yesterday, the very first swing trade of the year, Starbucks, was a losing trade. So I just want to get that out there that it happens. Even on good ideas, it just didn't follow through. You take the loss, you go to the next trade, and immediately in your mind, how do I make this back? Where's the next good opportunity? And that's what's going through our head this morning. So I just wanted to really give you an idea that real traders are not obsessed with the charts. The charts should become second nature. Then the real money, the real skill is after you are actually in the position. All right. So let's head on over. We're going to take a look at Apple and the news in Apple and whether or not it's a buying opportunity. Just a phenomenal news story that happened yesterday. Briefly topped $3 trillion market cap. A lot of this has been about stock buybacks and clearly talking about it's interesting. They called it the iPhone franchise. I never heard of it that way, but I guess that's a way for a big company like that to talk about it. Now going forward, they have metaverse stuff coming up. The Apple car, which has been secretly talked about for a while. I think Apple's very well positioned for the future, especially if they end up coming up with the Apple car. There's so many people devoted, even to this day, to Steve Jobs and the company Apple itself. I think that they will have assuming it's good, they'll have an immediate lateral move from a lot of people that have those iPhones and working their way right over into what happens next. So what does that mean for Apple stock, and how does that translate into some opportunities today, and whether or not they are buyable? Well, we spend a lot of time here on this channel. And by the way, if you're new to the channel, please do me a favor, click subscribe and smash that alert button if you find some value out of what we're doing here today. We are now at all-time highs, all right? And the stock has now punched through on some pretty good volume. Now, if you're watching what we talk about every day, everything that we discuss is whether or not it's near the optimal entry. The optimal entry sounds mysterious, but it's really how far are we from the start of a normal momentum move in the stock. So if the stock normally goes 20 and right now it just started moving from the last place it paused. So if you keep in mind push and pause, where is the stock relative to the pause before it starts pushing? So if it normally pushes and pauses and that previous push is normally 20, is it $2 into the next move or $18 into the next move? Does it have $18 left or does it have $2 left? So if we take a look at Apple and whether or not it's an opportunity to buy this stock right now, the most recent previous moves have been somewhere in the area of $20. If we look at the recent bullish moves prior to the stock pausing, okay? So yesterday the stock broke out. We basically went from 177.50 up to close to 182.50. So it's already gone $5. So that implies, based on what the stock normally does, there's roughly 3/4 of the move that it normally does. We are far from the optimal entry, which was yesterday coming out of the 3-day pullback. And a lot of the tech stocks kind of had good bounces yesterday, which if you remember, if you watched yesterday, we talked mostly about semiconductor stocks. So Apple, as of right now, and I purposely started today talking about a trade that didn't work out in Starbucks yesterday, because it already has gone a quarter of what it normally does. So if we're beyond the optimal entry, I am still looking to be a buyer of Apple, but because it's beyond the optimal entry, I am going in with a little bit less position size for my first entry, assuming, again, if you didn't happen to take this trade, because we get a lot of people that comment after the fact that you said to buy Apple and I lost money on Apple. So I always want to make sure that I clarify the statement. Position sizing, which is what we just talked about in trade management, which includes the entry, the managing the downside and managing the upside. Managing the downside includes position sizing. That's in our modules. We call that risk reversal in the bootcamp. So in this case here, I do like it, but I'm going to go in with a little bit less position size at all-time highs simply because it's already moved a decent distance. So that's Apple. That's starting out with Apple. Next, we're going to talk about Marathon Digital, Bitcoin mining stock, which is in play again this morning. And if you remember yesterday, we talked about the fact that Bitcoin specifically, and we'll bring up Bitcoin right now and walk you through the chart of Bitcoin that we drew yesterday. And if you're watching this, you know that we are very big on mapping out Bitcoin and working the box, right? Working the box in Bitcoin. So we have this move down. We went into this box, and I want to do this live for everybody because this is literally what I do on all my charts. And then we actually had where we are right now. So Bitcoin is kind of still stuck in this box. So what that means is when I start to work the trades, I want to know, is order flow obvious or is it the right price right now? And the right price is when it starts to go sideways and buyers or sellers just can't push enough order flow to move it out of that box. So right now, Bitcoin is near the bottom of the box, which is implying the next move could be to the downside. Could be. Again, in the box, we don't guess. We wait for it to get out of the box with volume. Mara yesterday, we were very clear with Mara yesterday saying Mara was not a buy or a short sale simply because we were at this major support level where the downside profit on a short sale was not significant enough to justify the risk and the upside was not in play yet. However, the good news in the stock has it up 1.7%. So now the obvious question, if we were in my trading floor in New York City together, is when would we start to look to be a buyer of Mara? The minimum criteria that I'd be looking for after this news, which is pretty good news, I'd look to see the stock at the very least go well bid on the daily chart, which means higher highs and higher lows. And to give you an idea of what that means, so right now we're down here. We've pinpointed this support level. And I've said I want to see it go well bid. Now, this was the first attempt at it going well bid, where we had a bullish U-turn. Then the next day and the next day, both had higher highs and higher lows, very similar to here. We're looking for a reversal. But, and here's the big thing I want to talk about. Remember in Bitcoin how I just showed you we had that bearish order flow for almost 2 months, and now we've gone into a box. That box is what we call a potential change of trend. And if you remember last week, I want to say it was either Wednesday or Thursday. I'll repost that segment of the video. We talked about a PCOT, which is where money goes to die, which is a potential change of trend. It's easily one of the most common places that active, smart traders just don't go that extra mile and miss the fact that that's the right price. They don't work the charts the way we just showed you. So as of right now, even if we go well bid for a couple of days on Mara, which means that we would see higher highs and higher lows if it breaks out of this based on the good news. It's not enough price action. The last time it went well bid, it failed, pulled back, right? The last time over here, it went well bid, it pulled back and failed. Now we're at a support level. So now remember what we talked about before. We need to see arguments. We need to see reasons that we think it's going to continue in the direction that we plan to buy the stock. So well bid after 3 months of selling and 2 months of selling and Bitcoin still stuck in that box. As a matter of fact, at the bottom of the box, I would be more likely in this particular scenario, before I started to build a swing trade position in Mara, I'd want to see the weekly charts go well bid, which would mean higher highs, higher lows, and closing strong on the weekly charts, not on the daily charts, because the last 2 times the daily chart went well bid, higher highs and higher lows, it failed and pushed back to the downside. So if Bitcoin catches a bid and gets out of that box, let me just show you the box again, which is roughly around 52,000, I believe, something like that. You're right around 52,000. If it gets out of this box and gets to the upside, and if the Mara chart goes well bid on the weekly chart at the same time, higher highs, higher lows, and closes near the highs, then I would start to consider this a reversal of the order flow. And that would be the initial position for me looking for a new move in the other direction. That breakdown is what everybody should be doing on every single trade that they are looking at. We did not just say if Bitcoin goes up tomorrow, I'm looking to buy Mara. We did not say that if Mara rallies today, I'm looking to start a new swing trade in Mara. There's not enough evidence in the charts, in the order flow, and the tape for us to decide I'm just going to get in there because it's up this morning. It's not enough evidence. It's not enough feedback from price action. It's not enough feedback in buying pressure and volume, real money committed to that idea. I think it could have a much bigger move. I think Mara can go back up to all-time highs. But as of right now, Bitcoin and Mara are not in bullish order flow. Bitcoin is stuck in a box. Mara is still in bearish order flow. Those are the kind of things. Now, if we take it to the other side of the equation, and we can go back to Apple, any idea that is a better idea, and when I say better is that it's already showing the order flow that you want to mimic, showing the order flow that you want to buy into, those are, again, keep this in context, those are the easier trades. Those are certainly the better trades because they're already doing what you want them to do prior to you buying that stock. Now, as I just talked to you about Starbucks did not have bullish order flow. It had breakout potential, looking for new order flow, looking to hit all-time highs. So that's a different strategy within the context of looking for follow-through. I can't stress this enough. I could mail it in. I could be like, let's just look at these stocks. I want you to understand in a very deeply passionate way, there's a difference between what you're probably doing right now if you're struggling and what we're talking about right now. So I would strongly, passionately ask you to watch this stuff again, watch this video again, pause it, watch it on fast forward. You'll hear me talk like Mickey Mouse. Take notes, stop it, pause it, write notes again. What we're talking about is becoming a trader, becoming a profitable trader, becoming a trader who is in charge of the outcome, which means you're thinking stuff through exactly the way that we just outlined it. And I'm going to challenge you. Ask yourself, go look at your P&L, look at your profit and loss statement and say, what part am I missing that I am not profitable? That's the biggest thing I'm going to challenge you with every single day while we're here in the market together. Look, if you want to join me for 30 days, click the link below and come join the boot camp. It's only $295 for 30 days. I have no doubt in my mind we will blow you away with what we do in that 30-day period, but only you can decide if you want to take that step. If you want to stay here on social media, I'm 100% okay with that as well. It's up to you to get yourself out of where you are now if you need to get to the next step. So what I want to do now, obviously, that I want to give you this, take a snapshot of this so you can get a very clear image of what it means for a stock to have order flow, be stuck in a box, and how to have a higher probability of follow through. All right. So what I want to walk through now, again, I'll take as much time as we need here. We're going to start talking about this, which is the sector rotation. Consumer cyclical, very strong, mostly based on what Tesla did. Consumer defensive and energy, we talked about that. Rising interest rates, rising inflation on the horizon. These two guys are probably going to work their way up. But what I want to talk about today is energy stocks and financial stocks. Now, in the bigger list of ideas that we actually give out, everybody, this is a part of what we do exclusively. And I only usually give this out, the list I'm showing you right now, to the members of our Bootcamp and our Order Flow Pro programs. The reason I'm showing it to you now is a lesson in asking yourself, how deep are you going before you commit capital? How deep are you going to find reasons to take risk? How deep are you going? How many distinctions are you making in the difference between, I saw something on Reddit last night and I have to buy it today, versus you're actually doing the game planning and taking it a step further? And here's the exciting thing. As you start to track this every single day, like I do for our community, you start to track order flow, you start to track sector rotation, then you dive deeper into those stocks, into sector rotation, you start to notice things 2 weeks before you see them on headlines. So what we're going to talk about now is, this is the list of the stocks that meet the perfect criteria. Okay. Now, when I say perfect criteria, I'm talking about from an order flow, tape reading perspective, and how they closed yesterday relative to net change and how they closed relative to the opening price yesterday. So they meet all of those criteria. Doesn't mean they're a trade today. It means these stocks met the perfect criteria. So I track these and I give this whole list week by week, day by day to everybody in the community, and we track the individual stocks. So you build a perfect master list of stocks that meet the perfect criteria. Then one day FANG could be in play, another day IBM could be in play. But you have to have that list in the first place, assuming you know what perfect ideas look like. Again, start with perfect and everything away from perfect, adjust your position size, right? So the fun thing that popped up yesterday that wasn't in the list the day before, and this is why it's so important to do this every day, is you start to break this down and look at the different sector that popped up in here that was not here yesterday. So now today we're looking at a list of energy stocks and breakouts today. Technology stocks are still in there. If you remember yesterday, we talked about semiconductor stocks. They dominated the list. So and today we have ON, just to give you an idea. Also, MU is in our list. But energy stocks at or near breakout levels that are now starting to perk up in the bigger picture over the last 21 days and over the last 5 days, and working their way into the perfect criteria. So that means that now we start to create a separate list of stocks that meet the energy criteria. And I'm just going to walk some of those through for you today, so you have an idea of some ideas that not only are now breaking bearish order flow, and again, hopefully you're working these charts. And again, if we work the chart here, just to give you the full Monty on this thing, you would have been ready for this. So think about this. Think about this right now in the context of, are you prepared to make money? If we walk through this right now, the one that we saw in Bitcoin was a box that lasted a couple of weeks, and it's still going on, right? It's actually still going on. But if we look at Schlumberger and you were monitoring these stocks like we do every day, it actually pushed down. It broke the order flow here. So as soon as it broke the order flow, we were drawing this line and had an alert set for this price. You already should have had this stock in your watch list if you're doing this every single day. And look at that energy. Look at the breakout and look at that. Now we're looking to start new moves in that direction. So we have SLB, VLO. Again, the biggest thing you should be focused on is the breakup trend and the volume on the push and the pause, the push and the pause, the push, right? VLO, CVX also breaking out, right? PSX, just reversing the order flow. Again, stepping up into volume, all right? These are the processes that you should have every single day with understanding. If I'm going to work really hard at my job, let's say you're an engineer, let's say you work at McDonald's, it doesn't make a difference what you do, but you're putting your money away and you want to make extra money in the market, or maybe you want to take the leap and you want to be a full-time trader. This is the kind of stuff that if you really want this to be a side income for you, put game planning and scanning and looking for order flow and reading the tape on your calendar, and do it at the same time every single day if possible. Allocate an hour to going in there and making extra money. If you think you're going to allocate 10 minutes to making $1 million, it's not, I almost cursed there, sorry. It's not going to happen. The more time you invest in becoming smarter, in learning from your mistakes and learning from your successes, and digging a deeper knowledge base of the ideas that you're looking. So we just talked about technology stocks still in that list. We've talked about, this is the last one I want to follow up with. And let me actually, the deeper the knowledge you get, the more conviction you're going to have, which is going to translate into better habits and more consistency in your P&L like that every single month. But here's the next one I want to talk about. Okay, we're going to go back over to this list and we're going to look here. So when I run my scans at the end of the day, I'm also looking for what we call energy candlesticks. Okay, energy candlesticks are what we just saw in the energy stocks. Ironically, energy candlesticks, energy stocks. But energy candlesticks are individual types of candlesticks that have large body and large volume. So when I ran my scans yesterday, some stocks popped up. They're not trading opportunities yet, but they're now on my radar. They're now in my tracking journal to keep an eye on. And I want to show you the difference between stocks that are tradable now versus stocks that you notice something in the price action And now they're in the tracking journal. And now you're going to start watching them every day, even if they're not a trade yet. And that's the financial stocks. So I'm going to walk you through some of the stocks that popped up for me yesterday and why they popped up. So we take a look at American Express. Look at the volume compared to what it normally did. Goldman Sachs yesterday, $12, 3%. Look at the volume. Breaking this downtrend. Morgan Stanley. Look at the volume. JP Morgan. Look at the volume. Citigroup. Look at the volume. Look at that break. And you can see how I'm working the charts. You can see I'm actually doing exactly what I'm walking everybody through, right? So even though these financial stocks are not trades for me now, maybe there'll be day trades today if we get follow through, but they're not longer term swing trades because it's the start of a new move, the potential reversal. And to bring that together, just so you can have an easier way to watch it, we've been monitoring the XLF, which is the sector ETF for financials. And we've been closely monitoring it here right around the 50. You can see the 50-period moving average acted as support on the way up, acted as resistance, and now it's back above. So we're looking to see if it stays above. So what I'm going to leave you with today is the phrase you should be using all the time, and why I started out with talking about a Starbucks trade today that didn't make money. We said, if this happens, then I plan to do this, and I'm looking for this type of follow-through. So today in the XLF, the way it rallied yesterday, bullish gap, held the 50-period moving average, closed strong. Right now, what I'm saying is if the XLF stays above the 50-period moving average, and if the XLF goes well bid on the weekly chart, and if the volume continues to stay strong in that list of stocks, then I will start to game plan for longer-term trades in those ideas. That's the difference between trading doesn't work and you actually putting in the time to try to become a real trader and stop being a better chart reader. Chart reading is a part of what we look at, but chart reading is not trading. I want to leave you with that thought today. All right. If you found some value with everything we did here today, please do me a favor, smash that like button, hit subscribe. That would really mean a lot to me. And I also know that this is the kind of content that you like. All right. Have an awesome day, everybody. Have a profitable day, and I'll speak to you soon. Watch this video again. We covered a lot of stuff here today. All right. Take care now, everybody.